Hey, good evening, friends and fam. Good evening. Hope all is well with everybody. Hope all is well with everybody. So today we're going to dive into a specific topic today, and which is retirement, right? And which is it's a huge thing right now in America because a lot of people are having an extremely rough time and trying to figure out how to navigate towards retirement. A lot of people don't know where or which direction to start. But more so, a lot of people don't know what vehicle to use. So once they have actually retired, they don't know where to go from there or how to make their money last or work for them or how to keep their money safe. So today's topic is going to be why annuities are one of the smartest options for not only retirees, but anyone with a lump sum of money, right? Anyone with a lump sum of money. And some of you guys, you may have heard the word annuities before. And sometimes, most of us, when we hear that word annuity, it's usually, by way of, let's say, somebody won a lottery, right? And it's suggested that they put the money into an annuity. So that way that money will last longer for them. You understand? So they don't blow through the money. Okay. So that's going to be the topic for today. But I have a question for you guys who are watching this, and some of you guys may be too young to remember what happened in 2002 and in 2008 in reference to the American market, right, or just the global market, period, right? So I have a question for you, and for the ones that do remember what happened, during that time frame and how a lot of people lost massive amount of money in their retirement because the market crashed, right? If the stock market dropped 40% tomorrow, how would your retirement look? If the stock market dropped 40% tomorrow, how would your retirement look? And this is what a lot of people they forgot what happened just roughly 20 years ago that this just happened. And everybody's going back and doing the same thing that they were doing. All right. So that's what I want you guys to think about. While you're doing that, I want to briefly just introduce myself. My name is Maxwell Akinsenwer. I've been in the financial service realm arena for 17 years now, right? And I work with different type of people, right? Whether I'm doing life insurance, whether I'm doing retirement planning, whether I'm doing, I see I'm somebody who might need some funeral arrangement situation, which is like final expense. I work with all age of individuals, so it doesn't just have to be a person who, is older. You know what I'm saying? Because again, one of my key factor in my drive is trying to help younger folks start to plan toward retirement at an early age. So I pretty much, work with, middle income America to upper income America. And at the end of the day, I'm just here to educate any and everybody who wants to learn and who wants to listen, right? So tonight, what I'm going to show you is how to turn any lump sum into a guaranteed paycheck that you cannot outlive. What I'm going to show you tonight is how you can turn any lump sum into a guaranteed paycheck that you cannot outlive, regardless of any market condition. Okay. If you're watching this right now, I want to know, where are you from? What city and state are you from if you're watching this right now? Okay. Are you retired or are you planning to retire soon? Right? Where do you stand right now if you're watching this? Right? Now, let me ask you. So, let me just give you a brief definition of what an annuity actually is. Okay. Um, Simply put, right, what it is you give a portion of your money to a financial institution. Okay. And in return, they give you an income for the rest of your life, almost like a pension. almost like a pension is really what an annuity is. So you take your money now that you've accumulated over time and you give it to a financial institution, and they now say, okay, you know what, this money you're giving us, okay, we'll make sure this lasts you forever, and this money will actually outlive you. Okay, so which means you will never run out of money, which is one of the main benefits of an annuity. What a lot of people love about the annuity, no other vehicle give you the opportunity to have your income guaranteed for the rest of your life. None. Not your 401k, not your IRA, not your Roth IRA, not your CD, not your stocks, not your bonds, not your money market, nothing. Savings account, nothing. No other vehicle out there guarantees your income for the rest of your life. Okay. Um, the another benefit of the annuity is this: your income is protected from any loss of the market. Your income is protected from any loss of the market. And as the person starts to get up there in age, right? One of their main concern is to hold on to their money as much as they can to protect it. Okay, that's one of their main concerns, right? So annuity offers that. I usually, when I sit down with my clients, especially if they are 59 and a half and above, I start to talk to them about maybe securing a portion of. So, for example, if a client have $1 million, right, saved up, right, because they're over that age, that they're at that qualified age of 59 and a half, for example, unless it is still working, right, they're actually able to move that money into somewhere safe to safeguard it. So, in most cases, I would say, hey, have you considered safeguarding a portion of your money, especially if you're going to be retiring a year or two later? You don't want to wake up. You don't want to wake up, one day and the market just go boom and half your money is gone. 40%. So you had $1 million overnight in 1 year, you lost 400,000, right? For as an example, right? And now you're left with $600,000 before taxes. Okay. So and that has happened to a lot of people, just so you know. So when I sit on my client, I talk to them about trying to put at least a portion into somewhere that can be safe and they can, make sure it's guaranteed to be there, right? So that's one of the things that also annuity offers is the protection from the downturn of the market, right? And and when we talk about annuities at this moment, what I'm talking about is what's called a fixed indexed annuity, because there's different type of annuities, right? And there's been a lot of negative conversations about annuities out there. What I'm talking about is the annuity that's going to bring you the most amount of results, right? Guys, give me a second because I've been live streaming all day today. Let me get my energy up. So get my seltzers on real quick, right? So that's good. Um, I'm gonna give you guys an example. You know, I'm gonna use a particular individual, right? Age 67. Okay, she had $350,000 in her savings. Okay, and that money she got from I'm trying to remember exactly. I believe it was a lawsuit because she fell at a job or something like that. Okay, so 350K is what she had in a savings account. Okay, as a matter of fact, she had more than that. She had over 600 something thousand. But because the money was in her bank account and it was there, she was using and loaning money out and giving blah 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 blah, and boom, and now we're at 350. And she said, "Hey, I got to do something with this. This can't stay here. I'm blowing right through it." Right? So we put it into a fixed index annuity. Okay, and what happens now is she now has locked in $21,000 of guaranteed income for life. For life. Let's do the math. Let's do the math. She's 67, right? Let's say she passed. She passed away. Give me a second, guys. Sorry about that, guys. Let's say she passed away at that's my video for my birthday celebration. So some of the videos to watch. So let's say she passed away at the age of, let's say, 89, because most women live to about 87 or 89. So she deposited to the financial institution $350,000, and they guarantee to give her 21,000 every single year until she passed away. Okay, so let's say 21,000 times 22 years. So now she'll end up getting $462,000. It's actually what she will end up, getting in totality, because she deposited $350,000, right? So that's a total of $112,000, extra that she's earned. That you can say that she got because she deposited money into that institution. And let me tell you why this is huge, because over this summer, I sat down with an individual who I helped him put together. He roughly over $500,000 into an annuity, right? Pretty young fella. He's not going to start taking out money until the age of, well, he hasn't decided what he wants to do yet. He might start to take out distribution or might do another redeposit, because the gentleman is like 59 or something like that. So the annuity will actually mature right about the age of 69. So which means he can make a couple of things can happen. He can withdraw the whole amount. He could start to take out income stream, or he can redeposit, right? But because we did about 500 grand, by year number 10, year number 11, that 500 grand now becomes 1 million and some change, almost 1.1 million, right? So when I said earlier, I'm talking about a fixed index annuity, not a fixed annuity. Because a fixed annuity, the rate is usually way lower. The interest rate is usually way lower. And that's the one a lot of people know about. That's the one that they've got negative results from. So what I'm talking about here is what's called a fixed index annuity. Okay. Now also too, for the first time, this client, out of her own mouth, said that, hey, listen, I feel safe and secure now. Because when she got that money, she was just blowing it. She had the money for about a little bit around 4 years, almost 5 years or so. It was 600 something K. And in less than 5 years, it's down to 350K. So she was terrified, right? So she was so glad that she made that decision, because at least this way she knows that, hey, 2 years from now, she won't have any, she knows 2 years from now, by her making that decision to move the money, she knows that she won't run out of money. And she'll have income coming to her for a long time, right? What I want to talk about now is why the annuities is needed, right? There are 4 major threats when it comes to your retirement. Mainly 4. And the number one thing that scares most retirees is outliving your savings, outliving their savings, outliving their retirement is what scares a lot of retirees. Okay, that's number one. Number 2 is inflation. Just let me give you an example as to how inflation works, just in case you guys don't know. Every $100 becomes $60 in 20 years, which means the value goes down every 20 years. So what you could purchase for $100 today, you're not going to be able to purchase that 15, 20 years from now, right? And let me tell you why I know this is so true. Let me tell you why. I remember being a child, and I'm the oldest, and I used to go to the grocery store with my mom, and I remember $100 of groceries. The trunk would be so full you couldn't even close it. $100 of groceries, and this time I probably had to be around maybe in middle school, maybe around middle school, right? You take $100, you go to the grocery store, and you're eating well for probably 3 weeks to a month. And I say 3 weeks to a month because it was, three boys, three big boys at that, and then my mom. So like four of us in the household, right? So yeah, so the value of money is a concern. Okay. The volatile market, which means that hey, I want to make sure that wherever I put my money in, it's gonna be there when I get back. I don't want to wake up one day and all my money's gone. Last but not least, and I probably should have put this as number 2, to be honest with you. Healthcare and long-term care expenses can evaporate your savings quickly, especially if you don't have long-term care coverage or if you don't have life insurance with living benefits. If you're watching this right now and you're 59 and a half and you don't have life insurance with living benefits, let me give you my number. Text me at 443-208-5480. That's 443-208-5480. We need to sit down and get that together for you ASAP. And why do I say that? Here's the data. They say that 70% people over the age of 66 have a 70% likelihood of needing some form of long-term care. People over the age of 66 have a 70% likelihood of needing some form of long-term care. And we know for a fact that only less than 7% of the country population have some form of long-term care coverage. And this is one of the reasons why most people end up broke in retirement. Because when most people are saving for retirement, they only have one thought in mind, which is income to live off of. But they never factor in health. What if something happens to me health-wise? How would I be able to pay for this? I'm over here in Maryland, the DMV, District of Columbia, Maryland, Virginia. In Maryland alone, the cost of an assisted living facility per year is $105,000 to $110,000 per year. The cost to have a nurse aide, if you say, hey, you know what? I don't want to go into a home. Kids, please do not put me in a home. Okay, no problem. The cost for a nurse aide to come in and take care of you is about $5,000 a month. That's $4,800 a month. So when they say that you need about $1.7 million to retire comfortably, they're not just talking about to pay bills. They factor in healthcare along with that. I think they say most people will end up paying roughly $380,000 in healthcare costs during their retirement, during their lifetime in retirement. That's a lot. That's a lot of money. That's almost that's half, if not most, of people's retirement income that they will spend just on healthcare. Right? Chad, welcome to the live. Yeah, true story, right? There's so much we can do with our health to maintain good health. Is not expensive. Just good habits and as close to natural as possible. These are highly processed food. You know what, Chad? That's so funny. I was talking to a good friend of mine today. I actually gave her a book. I purchased this book online that talk about natural remedies and just trying to avoid all these things. I was watching this thing a while ago that talked about everything they put in our food over here in America. Everything's processed. Like everything has sugar in it, and the general was talking about even the ketchup and the mustard. And I didn't believe it, so I went to my refrigerator and took out the ketchup, and I looked in the back, and that thing has sugar in it. Everything that we have here in America is processed and it has sugar in it. So listen, like um lately I've been watching my health. I've been watching what I eat. I'm consuming a lot of water. This thing right here I'm drinking, it does have some form of sugar in it. But I try to limit how much I do drink, but I do consume a lot of water immediately afterwards. A lot of water immediately afterwards. I try to eat a lot of fruits and vegetables. I try to make sure my fruits have seeds in it and not all these, altered and genetic stuff that they're giving us. But a lot of people, it's it's a price in America that you have to pay to live. It's a price in America that you have to pay to live. It's crazy, right? Let me give you another scenario, right, of a client, right? So they retired in 2007 with 600K in their investment, right? And they were actually a referral by one of my clients, and the reason why, because they went through the financial crisis. So sitting down with them, they're telling me what happened in their story, right? And this is real stuff right here, right? They had 600K, husband and wife, 600K in their investment. In 2008, the market crashed and the market dropped. I mean, their investment dropped to $350,000. They had 600K on their way, thinking a couple more years or so, they'll have close to a million and they could retire. And just overnight, evaporated. 350K. Okay? So now they're going to have to rely on Social Security to supplement whatever that they have left over. And even still, that's not enough because they live in Chevy Chase, Maryland. If you guys are from the area, you know what I mean. They live in Chevy Chase, Maryland. Mind you, they still have a mortgage. So most of the time when I sit down with my client and I see that they have a hefty retirement account while they're still working and they are of age meaning that the age that we are actually able to move the money while they're still at work, I immediately suggest that to them. Safeguard majority of your money because you don't want to wake up, especially with all this politics going on, different administration, different things changing, the market, like all this stuff, right? You don't want to mess around one day and wake up and your money is gone and you're 65 years old. and you now have to tell yourself you have to work for 15 more years. You don't want to do that to yourself, right? The question I want to ask you guys is this: what if they had locked that money into an annuity before the market crash? Okay, they will still have majority of their money right now, and they still will have access to Social Security, right? It's just something for you guys to think about. Yes, Chad, we're paying for water that God. That's true. Hey, Chad, listen, I'm gonna send you a video I was watching last night, right? Because again, I'm 48 years old. I'm right around the corner, and my retirement age is 57. Worst case scenario, 59. No longer than that, right? So really, I just had a birthday a couple of days ago. Excuse me, guys. I just had a birthday a couple of days ago, and I'm right around the corner for retirement. So last night I was watching um, something on YouTube, places that people can retire to that's not so expensive, and it's an island. And I say it's different islands, and they're all U.S. territory, like Puerto Rico, St. Thomas, St. Croix, St. John, beautiful areas that you can retire to. But even still going there, you're gonna need some form of money, right? You're gonna need some form of money. AARP put an article out last year in November, right? And that article stated that people between the age of um, 50 to 66, roughly 30% of them have zero retirement savings. People between the age of 50 to 66 have zero retirement savings. Let me make it real for you guys, because I like to be transparent here. All right, let me see. What is the total number of people in the United States who are between the age of 50 and 66?
There are roughly 54 to 59 million people in the United States
Whoa!
aged between 50 and 66.
Whoa!
This estimate is based on the populations of those aged 50 to 54 and 55 to 64.
Whoa! 54 to 59 million people have zero retirement savings. Like, you don't know how huge that is. I'm sorry, is that right? No, I'm sorry. I'm sorry. Let me fix that. So 30% of that, give me 1 second. What is 30% of 59 million?
The answer is 17,700,000.
Perfect. So out of the 59 million, 17 million people don't have any retirement savings. And then the remainder group of people, they're saying 70 to 80% of them, right, say they know they don't have enough to retire. So at least they have some money, but they don't have enough to retire. Ladies and gentlemen, this is a problem. This is a problem. If you're watching this right now and you are 35, 40-year-old, 50-year-old, right? You still have time. I work with clients every single day on this. You got enough time to accumulate money, and then once you accumulate the money, you can now take that money and move it into an annuity that will guarantee your income for the rest of your life. I work with clients every single day on this. right? Yes, Chad. 17 million with zero retirement. That's crazy. Yeah, you guys should look this up. This is from AARP. This is from as a matter of fact, they are starting to send me stuff. I thought you had to be 50 years old to get AARP, but they sent me stuff to sign up as a member. I was like, okay, I guess I'm up there. I don't know. So yes, so yeah, that's crazy. That's crazy. That's a lot of people right now in the country that need help, right? Now check this. Who can benefits or who are annuities perfect for? Okay, anybody who's near retirement, 5 to 10 years out. If you're 5 to 10 years out for being retired, there's a reason why this will benefit you because you want to safeguard. So if you're 50 right now and you have some money, I'm sorry, if you are, let's say 59 and a half, I'm sorry, and you are 10 years away from retirement, it probably makes sense for you to look at safeguarding a portion of that money into an annuity. So that way, if you wake up the next day, at least you know you're good. If you have $1 million in, let's say, your TSP, your 401k, your 403b at the job, it'll probably make sense to move 900 grand of it into an annuity and safeguard it. And maybe let's see what the other 100 grand will do. Let's hope the market is good. But at least if the market crumble, you lose, let's say you lose 40%. You lost 40,000 out of you losing 400,000. You understand? So this is who an annuity will be good for. It's also good for nervous investors who fear huge losses. People like me, I don't gamble. When we go to Vegas, I'm the only one who takes my $100. And once that $100 runs out, I'm out the door. I'm not playing nothing else. I'm not going to the ATM, none of that stuff. But I got friends who do it all day long. They're walking in there with 500, 1,000, 2,000. They lose their money. They come out the next day. I'm not that guy. I'm just not that guy, right? Annuity can also benefit people with inheritance, lawsuit settlements, or business exit. So you sell a business or you win a lawsuit. I actually have a gentleman right now out of Texas who just got a lawsuit settlement. Well, they're closing everything out. And that'll be everything will be tightened up by the middle of December. He's a client of mine already with life insurance. And he immediately called me, hey, the settlement is about to, wrap up. What should I do? They told me about annuity. Do you do annuity? I said, yeah, I do annuity. It's okay, cool. I'm going with you. Right? So yes, so people who got inheritance, people who win lawsuits and things like that, because the money you gotta put the money somewhere that's gonna be safe, but it's also gonna make money for you. You understand? Instead of putting in your bank account, you put in your bank account, guarantee you're not going to make any money, but guarantee you because the money is visible there every single day, you're just swiping your card, and you wake up one day, most of your money is gone. Okay, those without pension this will also benefit you. So if you have like a job, for example, and you don't have any retirement I'm sorry, if you have, let's say you're 1099 or you're a business owner and you don't have any kind of like retirement savings and you want to create like your own pension, annuity is also great for that, right? Um, let me give you an example. Because give me 1 second here. Okay, because I talked about a gentleman over the summer who I did an annuity for, and I just want to give you like an example, right, as to how that will benefit him. And I don't have it in front of me right now because it's like a lot that made the guy attracted to the annuity. Number one, the interest rate that he got. That's number one. Number two, when we look at it 10 years out, it's money more than double. Okay. But the last but not least, worst case scenario, right? With that 500 grand that we deposited, right, we structured a the annuity, right? So if we decide for him to start taking out income, so let's say the income starts at the age of, let's say 60, for example, he can now start to take out $42,000 a year for life. A year for life. I want you to think about that for a second. Let's do the math. The gentleman is 50, right? Let me see here. 50 years old, deposited I'm sorry, no, I'm sorry, he's 59 years old. So he's gonna retire at let's say 69. Okay. So you're putting 500 grand in, and then he's gonna start to take out distribution all the way till he passed away. So from the age of 69, let's say he passed away at 89, for example, right? And let's say $42,000, okay, that he deposited in there, and then times, let's say, 20 years. So he deposited 500 grand, and the financial institution that we put him with is going to over time pay him $840,000. This is why most people gravitate to an annuity. Okay, $42,000 a year. Mind you, he's still going to get Social Security. Okay, I believe he also will get some pension because he's been at that job for probably 30 plus years or whatever. So I think he still has some pension that he's entitled to. So he will get some pension, right? But now, because guess what? The pension, he'll get the pension, he'll get the Social Security, right? And then he's also getting the annuity, which will last him all the way till he dies. So he's getting give me one second, guys. He's getting $340,000 extra from what he deposited, right? And let me tell you this. This is from his mouth, not mine. He said, I feel like I bought my future income now, not just stuff. Let me repeat that one more time because what you say? It's like, I feel like I bought my future income now. Which means that not only did I safeguard my future income, but I also bought extra money for my future with this money that I'm depositing right now to last me until I die. So I have no worries during retirement. Mortgage will be getting paid on time. Car notes, if he still have any. I believe, I don't think he has that much credit cards, not a problem. He can eat, travel, do everything you want to do in life without any worry. Without any worry. Okay, that's what annuity would do for you, right? Again, there are different types of annuities, so just make sure if you're working with somebody on it, make sure you know what you're getting into. What did Chad say yesterday? I went outside, paid for stuff, and had an argument along the way. Listen, going outside nowadays is going to cost you money. You can't go outside without spending any money. You can no longer go outside without spending any kind of money, which is crazy. And that's my goal for next year, 2026, is to limit the amount of time that I step outside my door. Because I've calculated every time I step out the door and go outside and come back in, I'm probably spending 50 to 60 bucks every single time. And some of you might be watching, oh, that's nothing. Well, if you add that up in a 25-day, 30-day period, that adds up quick. That adds up quick. So yes, so back to what I was saying. There are immediate annuity, and I'm not going to go and define all of it right now. If you want to know more about it, feel free to text. As a matter of fact, let me just put my email here in the so you guys can have it. Right. If you have any questions or you want me to shoot you out some, some brochures or anything like that, let me know. Give me 1 second here. Perfect. Okay. There's an immediate annuity. There's a fixed annuity. There's the fixed index annuity. And then there's the variable annuity. So what I've been talking about now for the past 41 minutes is the fixed index annuity. That particular annuity is the best of both worlds. Okay? The fixed index annuity, zero market loss with growth opportunity, is the best of both worlds. Okay? So I'm gonna give you a mini example. Let's say you put 300K into a fixed index, right? In a year with 8% index growth. Okay? Client get about let's say annually a 5% return, somewhere around there, right? Next year markets drop 20%, client loses $0. So you have the safety, you have a floor. You can't go below. The market crash, boom, you're still safe. You're not losing a penny. But the market goes up, boom, you're gaining. It's the best of both worlds. Okay? The reason why I believe an annuity is ideal right now for most people, right? The main reason, right, is higher payout rates due to interest rate condition, stronger lifetime income benefits introduced in the last decade. So the older annuities, a lot of people had some negative things to say about it because the rate was kind of low. Then they came out with this monster of a beast called the fixed index annuity. And for the past few years, it's been records upon records upon records. As a matter of fact, I think I talked about that in my last stream, right? Let me find this for you guys. Let me see. Because when I saw myself, I was like, oh my God, let me see. How much annuities were sold in 2024?
In 2024, annuity sales reached a record high of approximately $432.4 billion. This was driven by strong demand, especially for fixed indexed annuities, which reached $126.9 billion, and registered index-linked annuities at $65.2 billion.
Woo! Almost $432 billion in annuity sales last year. I wouldn't be surprised if we had 500 to 600 billion this year. And I won't be surprised if the next few years it hits $1 trillion. This is going to overtake 401k, 403b because of the fact that you have the safety side. The money I put in here is safe. I can go to sleep at night. I don't even have to open my statement. Okay? I know I'm not going to lose a penny. I'm good. And at the same time, the market is good. You're going up with the market. Man, that's tough. $432 billion in 2024. A lot of retirees today face more uncertainty than ever before. So an annuity is ideal for them because most of them didn't save enough money. The, the annuity company that I deal with, one of the main attractive things when I propose to a client and I look at the proposal and I look at the illustration, I look at the deposit the client is putting in and I look at what they're going to get 10 years later. In most cases, whatever they put in almost double or more than double 10 years later. So you put a $500,000 in, you come back 10 years later, you have about $1 million plus. Why is that important? Let's say a person that didn't save enough money. Okay. Now it's a way for them to have growth. So let's say the person only had $100,000 in their 401k. Now you take that $100,000 and you deposit into an annuity, right? A fixed index annuity, right? Now you come back 10 years later, you got 200 grand. You understand? So to me, it makes a whole lot more sense. And you have safety, which means that, okay, I only have $100,000. I don't want to lose any penny. Okay, so this right here will work for me because my money is guaranteed. And then once I start to take income, whatever that income is monthly, they will guarantee me that income for the rest of my life. Right? Give me 1 second, guys. Let me take a moment to debunk a lot of these annuities myths because I ran across a lot of people who, here's the deal. If you're watching this, just please sit down with a financial person. Don't be getting intel from your neighbor. Don't get intel from your co-workers, from your friends, from your family. Sit down with someone like myself who's in the industry, who can actually go through real information with you, right? Because you hear some people say, oh, I heard annuity is not good. Why would you say that? Oh, I heard you don't make money in annuity. Why would you say that? If that was the case, then why did they sell over $400 billion worth of this product? Excuse me, guys, right? There's value in this. Most people don't understand the value of an annuity until they're close to retirement. Because once you're close to retirement, at that point, the way you see things in life is different, right? At that point, you don't want to lose any more money in your life. You just want to make sure you're able to sleep at night, okay? You want to make sure that your money is going to be there, okay, when you need it. When you're 30 and 40, you're still a risk taker. Because you still want to gamble, you still want to try to get rich overnight, whatever. But once you're knocking on that door of retirement, now at that point, your life view change on risk tolerance, right? Some of the myths about annuity: too many fees. Let me tell you this: fixed and index annuities often have no fees. Now, each company is different, but in most cases, fixed and index annuity often have no fees. Another myth is insurance company keeps the money if I die, which is not true. That's why when you do the application, they ask you who your beneficiary are. This is where I don't know where people get this stuff from, but most people talk to people. Here's what I would tell you guys. Whenever a person starts to give you financial advice. You want to not only ask them what do they have, you want to say, show me. Show me what you have. If you're asking me, don't do this, but do this. Most of the time, most people just like to talk and they want you in the same boat that they're in. Just like the story, just like life insurance. Oh, you don't need life insurance. Oh, you can leave the house to your kids and all this crazy stuff like that. But they don't know that the house, in most cases, have to be paid off for you to leave it to the kids freely, or the kids have to assume the loan. They don't know in most cases when a person passes away, that house is probably gone. It's probably gone in 6 months tops, because it's probably going to go into foreclosure. Because in most cases, the children are either not going to want the property or they can afford the payment like you were making. So whenever somebody starts to give you advice that they are not financial professional, say, hey, what do you have? Let me see it. Don't just tell me an annuity ain't good. Why do you say an annuity is not good? And what do you have, in spite of it? What do you have? And in most cases, they don't have nothing. They just want you the same boat that they're in, right? So an insurance company do not keep your money. They have a beneficiary option. Okay. Another myth is returns are too low, right? Let me ask you a question, a couple of things. Compare safety versus losing 30 to 50% in a crash. Remember now, you're retired. I, I've been doing this for a while. Most retired folks don't care about no high returns. They are looking to make sure the money is still going to be there. They are looking for safety. Okay? But even along with safety, some of these fixed index annuity, you're getting 5, 6, 7, 8% return, which is still extremely good, right? Last one I'm gonna give you is this: I'll lose control of the money. With annuity, it's like any other investment. You make a deposit, just like a CD, for example. You put money in a CD, right? 5-year CD, 10-year CD. You're gonna have to let it sit there for it to marinate for you. But unlike a CD, with an annuity, in most cases, not all company, okay, you actually have access to 10% of your money after the first year. So your money is not held up. You understand? So yes, would you rather have unlimited potential and unlimited risk, or responsible growth and guarantee? I want you guys to think about what I'm trying to say here. Would you rather have unlimited potential and unlimited risk, which means your risk is unlimited, right? Okay? Or a responsible growth, which means a steady growth and a guaranteed income forever. So responsible growth, which means steady growth, no loss, and a guaranteed income for the rest of your life? Or would you rather say, I want to keep my money in the stock market and I want to risk it all? That's the question I want you guys to consider, right? As I close tonight, what an annuity does is an annuity builds a safety net so your lifestyle stays protected no matter what the market does or how long you live. Some of you guys may need to go talk to some people that went through the 2008 market crash. They are still, most people haven't recovered from that, just so you guys know. That was about 17 years ago. 17 years ago. Most people lost houses, property, half of their investment is gone, half of their 401k is gone. Most people are working now. And most people now are now close to 80. They were 60 years old when this happened, and they lost half of the value of their retirement account. And now they're working, they're almost close to 80, still working because they had to, because they left their money in the 401k and the TSP and their 403b when they should have moved it once they hit required age, which is 59 and a half. Once you hit that age, listen, I will always say this. You don't want to mess around once you pass the age of 50. You understand? The reason why I say that is this: you don't have time to recover. Time is no longer on your side once you hit that age 50. And I'm talking about when it comes to investment, because investment is about time and money. So if you are 50, or let's say 55 or 60, and you lose half of your life savings, you're going to have to work longer to get that money back. And in most cases, you're not 20 years old anymore. You're not 30 years old anymore. So you cannot work 2 or 3 jobs to be able to sustain yourself in retirement. So listen, I hope this helps somebody today. If you're watching this and it's your first time running across my channel, right? Please subscribe and follow. Please, if you like what you heard today, hit the like button for the algorithm. And if you know anybody who you believe may need to get this information, please share this with them. This has to go viral. A lot of people are hurting right now. A lot of people. I feel bad for people when I leave homes. When I leave their homes, I feel extremely bad for them because they don't have any retirement savings. It's scary what's going on out here. But not only do I feel bad for them, every time I leave a home and I run across clients like that, it gives me more of a wake-up call for me and saying, hey, I don't want to end up like this. This is not what I want to do. So I start to make changes and make adjustments for my personal self. All right. So listen, love you guys. Hope you guys have a wonderful, wonderful, and blessed rest of your day. And look out for the next live. Talk to y'all soon.